everyone, K Kim here with the Traders Club. Thanks for tuning in for tonight's episode of the Market Update. Today we're going to look at Spider and financial sector, and then also look at Russell, Apple, Intel, look at energy sector, treasury bond, and some gold and silver and things like that here. Obviously, had great weeks on Spider after it broke out of this, about 2 months of consolidation. But, looking at this, let's actually zoom in here real quick and look at this candle. You can see we have a hangman candle right there, and it just kind of sits on top. I think currently this gap, you see this gap right there? This gap is open. If Monday or Tuesday, if this thing gaps below, and creates island reversal, because this is gap up, this is gap down, I think there's a good chance that we'll have sell-off till about 232.03, 232 on Spider. Possibly retest at 20 MA. If we see that early next week. If not, if we start to... There's actually a gap here also. This gap is still open from this morning. If not, if we start fizzling around here a little bit, there's a chance that we could kind of, start to consolidate, kind of see what we've seen in, Russell 2000 and financials last month. We may see something like that. There's another scenario possibly comes down, fill this gap, right? And then see a bounce, and then we feel that gap, and then see a pullback, and then possibly, just kind of forming some kind of bull flag. There's also another chance there's a possibly forming double top. It just really is too early to say, to ascertain, to forecast what may happen here. But here's what I can tell you is that if we do see this thing gapping down on Monday or Tuesday, because we could see something like this on Monday, and then let's say on Tuesday it gaps down below 235, I think that could really jumpstart this selling pressure. Let's actually go to a 65-minute chart and look at this real quick here. This is a 65-minute chart of Spider, meaning each candle represents 65 minutes worth of data. Obviously, when you look at this, I have some of the oscillators here along with these candles. This is what we call bearish divergence. Again, this is forming in the 65-minute chart. If we formed in a daily chart, we don't have that on the daily. We only have it on the 65 minutes, meaning we have micro-term selling pressure. Let me actually double check on the daily. I don't think so. We don't have it. We don't have any bearish divergence on the daily. We only have on the 65 minutes. So this is a micro-term selling pressure we're seeing. Basically what he's saying is we had that one last whoomp. We had the one last like that bullish push. And so we did create higher high in the price action, but you see what happened was in the oscillators we created lower high. What does that mean? It means that the bulls actually, they are losing steam. They just used all that momentum, every juice they had left, they used that for the one last push up. And possibly if this possibly be an exhaustion gap, tough to say unless it starts to get below it. With that bearish divergence on the 65 minutes, we may see continuation to the downside next week if this thing starts to trade below 235. Here, let me make it more visual for you guys. Right there. So if it starts to trade 235.09, current support is right there at 235.40. Just make it right there, 235.48-ish. So this is very important. So these two levels, if you're a minor term day trader or swing trader, short term trader, these two is very, start getting below. If this thing gaps below and this becomes an island, could things get a bit ugly here. And so then we could see continuation to the downside. But if this thing fizzles around here above 235.48, there's a good chance you'll get up and fill this gap and it comes back down and then start to do something like that. There's a good chance if he starts gap up on Monday, let's say we gap up on Monday, okay, that would be a bullish case, then this would be island bottom. But I think because we have bearish divergence on the 65-minute chart, and because it's been pretty extended, I don't think even if we gap up, let's say we gap up on Monday, we see this, maybe in the morning, I think that gap up, that rally might be bought during the day, early morning. And then we might see kind of a long candle, something like that, and start fizzling around and coming. And we might see the volatility coming in. Volatility. What I mean by volatility is this up and down movement. A lot of these gap ups, gap downs, it gets sold at night, and you know what I mean? And in the morning, gap down goes up, and then it gets, let's say it gets sold in the morning, and then towards the end of the day, it gets bought out. A lot of up and down movement possibly happening here as we're preparing to go to the March here. And earnings season is getting to the end. A lot of retail stocks did well or been doing well. I have a lot of many retail stocks in my portfolio as well. And so it's funny how Kramer said that retail bloodbath is coming this week, but that didn't happen. Obviously, if anybody listens to Kramer for your investment advisory type of free service from the TV, then that really isn't going to work out. Anyway, so I have to say that obviously market is in a bullish sentiment. We're still in a bullish nature. We're still in an uptrend. I'm just really dealing with kind of a micro-term sentiment here, right? So, so these are the levels to watch, and any steep decline on Spider, I would buy that dip. So let's see how it plays out here next week. Again, if this thing does gap down on Monday or Tuesday, then this hammer will be confirmed. This hammer will be confirmed. We did hammer right here. We did see hammer here, but this never confirmed. Remember, it just continued higher. So this turned out to be just a resting pattern. So if this thing continues higher, then that also turns out to be hammer or a resting pattern. But let's say if this thing continues lower, then there's a good chance that this thing could continue to lower, possibly retesting this area. This is where 20 MA is residing. As you can see, that 20 MA is holding as support in the past. So maybe that's kind of what it wants to do, kind of catch up with that moving average. But again, as it's tough to say as of today. We'll see what happens on Monday or Tuesday. And then, obviously watch this level carefully. 235, 235.09 carefully there. And we'll go from there. Let's go to financial there. Financials hit a strong bullish move here since November. And then we started consolidating. And then it broke out yet again right there, and then we're kind of pulling back. So obviously we did see a gap down right there. We kind of have a little bit of island reversal type of sentiment. It's not a textbook, but you see that gap up, and then we see a gap down. That turns out to be possibly kind of exhaustion gap, and it is pulling back. I think I'm just kind of looking at my other screens here. I just want to look at 65-minute chart real quick. Yeah, you see, so we do have bearish divergence on the 65-minute chart. It has progressed quite a bit. Actually, banks actually have bearish divergence. Possibly, it's not confirmed yet. On the daily, this is actually kind of a concerning signal here, and that's pretty strong bearish divergence on MACD. So if that actually is concerning on financial. Again, we don't have that on the index on Spider. We have it on the banks. It's not fully confirmed because the MACD hasn't crossed down yet. But if it does cross down, this was the last time we hit a bearish divergence. We also had a bearish divergence right about here, a little bit, and came down and with a kind of a triple top bearish divergence right there. But this one is a bit strong. Look at the angle of this there, and then we got this angle. It's a big angle there. So if this thing starts confirm on the MACD, now let's keep an eye on this, and I'll update you guys on this next Friday. But if we start to see this bearish divergence, and for this bearish divergence to confirm on the daily, the fully confirm as far as the price is concerned, this will need to get below it. If we see that, then there could be much selling. But keep in mind, we're in this raging bull market. We're in this panic selling or buying mode. So what could happen is there's a way that stocks can able to nullify this bearish divergence. A lot of times what happens is this will start to come down, finds a support, and then what it does is start grinding. Okay, I think that's more likely. I don't see, just because we're such in a bull market, such in a raging bull market, I don't see this really plunging. Again, we'll keep an eye on this, but what I could see is this thing start to move like this, sideways, up and down, up and down, up and down like this. And then what happens to these oscillators, they start to neutralize and then comes out of this bearish divergence, and we start coming back up like this. And then finally, after maybe a month or so, the price is getting up. I've seen this happening a lot. This is a reason why when you're in this raging bull market and uptrend, just because we see bearish divergence, you don't go aggressively to short. I don't short at all. You want to short this off of this bearish divergence, I would at least want to see this neckline getting broken, which is 22.29. Right? So what you want to see this thing getting broken, retesting, and plunging. If we see something like that, I think highly likely we're not going to see it. Let's say we see something like that on financial, this thing getting below it, there's a good chance it will come fill this gap. You know, you will see something like that. And then at the time when that happens, it will probably meet with that 200 estimate. We probably find support. I don't see financials coming all the way down at 20. I don't see that happening. That is very unlikely. I don't see this thing coming all the way to 20. No. If that happens, I'll buy this dip hard, very, very hard. But I think that's what everybody's thinking. I think 21.59. If that bearish divergence confirms, maybe 29. The worst case scenario is 21.20. But like 19.20, no, hell no. But I don't even think that it will even get below 22.75. It's just the sentiment of the market, the whole market. We're in this panic buying mode. And so I think that's what's going to happen. Again, we'll look at it next week, see how it progresses. But I think that's what it's going to do. It's going to come down and start to fizzle. And then when it starts to fizzle, what it does is it nullifies that bearish pressure, and it exhausts the bears, and then they finally give up. And then once bears give up, it starts to get back up. So I don't see banks moving up because of this bearish divergence formation until it gets nullified. How it gets nullified? If the MACD is starting to get back up above this falling trend line, right? If this thing starts to do that, then it's getting nullified, right? That's when it's getting nullified. But I think it's gonna struggle. So it's gonna come down. It's gonna start to do this. I think that's what it's gonna do. But again, I'll look at it. I'll keep an eye on it. I'll continue to monitor. We'll talk about it next Friday. See what happened. If something progresses, I'll maybe do an update, or I'll tweet about it, or I'll write a blog about it. But for now, that's what's happening. The financials there. Let's go to Russell. I did buy some calls yesterday around 138.40-ish, I think. Check my blog. I did write an article, journal post there. And I talked about how if it gets below fill this gap at 136.87, I might even buy a little bit more. But for now, we're finding support here. Okay, this is old resistance, prior resistance acting as new support. I mean, if this can gap down, you bought at that gap down at 137.47. That's a great entry. That's a great entry. But let's say Monday, Tuesday, you know, market starts to come down a little bit more next week and fill this gap at 136.87. I think then there's a good chance that that level act as support. There's a good chance that that level act as support though. So we'll see what happens there. We'll continue to monitor this. Let's go to Apple. Apple finally pulling back after hitting like just extreme overbought sentiment on this daily. We actually hit the record high on RSI. This, you see, this is a daily RSI. We hit a record high there, printing 90 on RSI there, and stochastic is pretty much just topped out. But just because these signals are topped out doesn't mean it has to do that, because there are many ways to reset oscillators. It can start to move sideways, consolidate for about a couple weeks, this thing will come right back down and then ready to get back up. So just a lot of times people don't understand how to look at these oscillators and they start shorting aggressively. It's really difficult to play that way. I think the 20 MA is a good level. I don't know if we'll come all the way down there, but 20 MA has been acting as strong support here and here. So there's a good chance this thing could, if this thing does come down, we find support. I mean, if this thing comes all the way to 126.97, that's the level I would love to buy more calls. But I think that's what everybody's thinking. Everybody's thinking that if it comes down to retest 126.97, that they want to buy the calls. They know they were on an uptrend. They know that Apple's soaring. They know that Apple's bullish. They know that Apple could really do well this year. See, once everybody knows that Apple's going to do well, it's not going to give you pullback. It's not going to give you good entry. That's the reason why when everybody's fearful, that's why I went along here. I went with calls there, and I went by calls there. I started closing out up here. See, when nobody's thinking. Now, it has moved up quite a bit. So, 20 MA, if it comes 20 MA, I may think about buying the dip there if it comes 20 MA. But if this thing keeps on moving higher, I am fine to letting it go, because I'm not going to just buy it here. No, I'm not going to buy here when the oscillators are overbought. I mean, even on the daily and weekly. I mean, daily and weekly. Look at this weekly. We are extreme level on that weekly. Look at that. And this is not definitely, I mean, you want to day trade this, go ahead. You want to short-term trade this, yes, fine. But you want to do, I mean, something that I've been doing, you know, for my time frame, definitely not. I mean, why would I want to go long here? That's definitely not a level I want to go long. And just because I showed you this, we're going to see that. We ain't going to see that. We're not going to see 2012 action. What we're going to see is possibly something like 2014 here and here. One of these things is going to happen. That's what, 1, 2, 3, 4, 5, 6. About week and month and a half of pullback. This was about 2 months of pullback. But again, the market is significantly different today than back in 2014. We're in this hyper panic buying mode. So I think we might not even see. I mean, 126.97 would be ideal. Kind of retesting that support right here, right? That's still very much bullish, but I think that's everybody's looking for that. I think that's why we may not, I think 20 MA is a good level to go long if this thing pulls back. But we'll see. We'll see how it plays out next week. Let's go to Intel. Intel obviously been doing pretty well. This was my entry. I blogged about it, tweeted about it. I went out, took 1/3 there, plunged, bought more calls, got up, and then now we are holding this level. I thought if market continues to decline, the NASDAQ and all over market, I think there's a good chance this will come back down, retest 20 MA. There's a good chance. But if the market is resilient, market is holding up, there's a good chance that Intel can possibly break out here if we can get above 36.53. If we can break out above that, there's a good chance we'll get to about 38. I don't want to talk about Boston Scientific and eBay. You guys know that I am completely out of Boston Scientific. I am completely out of eBay. Those are pretty good trades, and so let's not talk about that today. Let's go to my watch list. Energy sector continues to get hammered. That's exactly what I was looking for. I want energy sector to come down to 68.46 or 67.75. Certain this level there, I will be buying calls there. So, but again, 200 SMA though is hanging around in that vicinity. So that kind of level could act as support. The 200 SMA really never really acted as support in the past. It really, this energy sector has been pretty much ignoring it. So I don't know how much weight it has, but I would love to see this thing getting plunged some more. I think once the banks and the spiders start to see weakness, there's a good chance it will kind of plunge more. And I would love to buy it there. Let's go to Treasury bond. As Treasury bond has been seeing some strength as the indices are start to slow down here. Again, if this thing continues higher, I'll probably just we'll see. I mean, there's a chance where you could. I don't want to go long until it hits 115. I'm gonna stick with it. It hits 115, I go long. Right now, this could possibly be some kind of bottoming process, or is this a bear flag before lower? Because I mean, you know, what would you say about this one though, right? Is it a bottoming process, or would it be a bear flag for lower? Well, this turned out to be a lower before actually bottoming. That's kind of what I'm looking for. I think we have a similar sentiment as 2013. So is this a bottoming pattern, or is it gonna go lower? I thinking maybe we go lower and I buy that. If not, we'll just let it go. I end the video with silver, gold, and miners as I do every week. Great move on silver here. Obviously, I have no positions on metals and miners, but we're now retesting this resistance there, this falling primary term resistance. Very, very good move. We're coming down, retesting it. What we need to see is maybe getting back to 170, getting above it, and then if we can see something like that, that would be inverted head and shoulder to nullify this head and shoulder pressure. You see that head and shoulder right there? So you can see that's also the neckline. You see that falling resistance, the neckline of the head and shoulder. This is a, you know, cluster of resistance kind of hanging out right there. But even if we break above that, you know, we want to see if we can do that, that will be inverted head and shoulders. And somewhere up here, maybe something we can work with above this falling resistance. There's a good chance we just stay above it, continues higher, and then pulls back, creates higher low, and maybe it creates equal highs there. So starting to look good. Silver is starting to look very well here. I like the fact that we potentially have this wide version of inverted head and shoulders, this being a neckline. So I want to continue to watch this. I want to be involved in silver and gold to the upside, possibly for a longer term hold, maybe investment idea and some longer term calls. But right now I want to see how it plays with that falling resistance. Let's go to gold, GLD. GLD broke out of this resistance. Good news for the bulls, but we're still bound by this long-term falling resistance, right? That primary term resistance. The primary term resistance coming all the way from the top, 2011 peak there. So that's actually, see, silver is breaking out of that, but gold is still bound by it. So if as long as it's below it, it's still tough for gold here, because this thing, if this thing gets that, hit it, it falls over, it's not gonna look so pretty. If it makes new low, it's not gonna look pretty. So you see, it's gotta still be pretty cautious here below that. But I think good news is in the minor to intermediate term, we have clear above that. We're getting above it. I think there's a good chance maybe the next level will be. Let me put that. There's a good chance, kind of, you know, that will be inverted head and shoulders to nullify this head and shoulder formation we formed You can see that's the neckline also. So if this is a neckline that coinciding with this, and then kind of a horizontal resistance, so this is kind of a cluster of resistance that possibly going there, and see how it plays out. The problem is, if we get up there, it pulls back, and it doesn't stop short, but it keeps coming. That's a problem. We want to see creates higher low and then getting up and gets above 124 pivot. If we can do that, there's something we can work with in that vicinity. We'll continue to watch it and see. So I might want to get involved in it if it does, but it could take another several weeks here. GDX is already pulling back in that equal high vicinity. If this thing pulls back and do that, that would be left shoulder, head, right shoulder, inverted head and shoulder. However, even with that pattern, we want to see GDX getting above. You see this trend line, that falling resistance, that peak, this peak, and that peak. Again, it's not going to look so pretty. We hit that, it gets new low. It ain't going to look pretty. So we're getting there. Buyers are really trying to completely or form this major bottoming signal, but it's not quite there yet. I want to see a full confirmation. I don't want to be hastily going long on gold and miners. I want to see a full confirmation before I start preparing it. That's everything. Have a great weekend. I'll talk to you next Friday.